This is Dario and I'm Sabiha Samar. Here are today's top stories. Uzbekistan has increased its hard currency reserves by $1.6 billion in July 2024, reaching a total of $37.4 billion according to the Central Bank of Uzbekistan. This marks a 4.4% increase from the previous month, achieving a new high with an average of 12 months of import coverage. Gold reserves have significantly contributed to this rise. The country did not sell any gold for the second consecutive month in July, increasing the physical volume by 310,000 ounces to 12 million ounces. The monetary value of these gold reserves grew by $1.8 billion to $29.1 billion, with gold prices advancing to $2,480 per ounce. Several factors including favorable import levels, Eurobond inflows, and resurgence in remittance growth have supported this stability. In the first half of 2024, Uzbekistan sold $4.2 billion worth of gold abroad. The World Gold Council reported Uzbekistan as a leading global buyer of gold in June 2024, with a net sale of 7 tons of gold since the start of the year, ranking third globally behind Thailand and the Philippines. The Kazakhstan-Uzbekistan Business Forum held in Astana on the 7th of August resulted in the signing of agreements valued at $43.5 million. The forum, which showcased the strong partnership between the two countries, attracted over 400 representatives from business circles and government agencies. Organized by the Ministry of Trade and Integration of Kazakhstan and the Trade, the Center for Trade Policy Development, the forum featured bilateral B2B meetings facilitating decisions on potential collaborations in various sectors, including agro-industrial, trade and construction. A key highlight was the signing of a memorandum of cooperation in the elevator industry. Yerzan Igibayev, president of the National Association of Elevator Specialists of Kazakhstan, emphasized the importance of creating a joint Kazakh-Uzbek enterprise for elevator production and establishing a dispatch center for diagnosing Kazakhstan's elevator fleet. Akadov Sarvar, general director of Technopark, expressed enthusiasm for sharing experience in organizing elevator and dispatching system production to European standards. Additionally, Uni-Tea, a Kazakhstani tea factory, signed a memorandum with Uzbekistan's largest retail chain, Korzinka, to supply 20 to 30 tons of tea per month. At the end of 2023, trade turnover between Kazakhstan and Uzbekistan reached $4.4 billion, with Uzbekistan being one of Kazakhstan's largest trading partners. Deputy Prime Ministers Serik Jumangarin and Jamshid Khojayev announced plans for investment projects and trade contracts totaling $7 billion during the forum. This initiative encompasses the collaborative execution of 34 investment projects worth $4.4 billion and 7 trade contracts valued at $2.6 billion, all formalized through a series of official agreements. The IMF has forecasted a global economic growth rate of 3.2% for 2024 and 3.3% for 2025, maintaining its April 2024 projections. Despite steady overall growth, the economic landscape shows mixed momentum. While global trade is buoyed by strong Asian exports, inflationary pressures continue to pose challenges. In the United States, growth is expected to decelerate to 2.6% in 2024 and further slow to 1.9% in 2025 due to a cooling labor market. The euro area shows signs of recovery with a projected growth of 0.9% in 2024, rising to 1.5% in 2025. Japan's growth forecast has been reduced to 1.1% for 2024 due to supply disruptions, while the UK's outlook remains stable. Emerging markets, particularly in Asia, are seeing a brighter outlook. China's growth forecast has been revised up to 5% for 2024, driven by domestic consumption and strong exports. India's growth forecast has also been increased to 7%. In Latin America and the Caribbean, Brazil's growth has been adjusted downward for 2024 due to flooding, but improvements are expected in 2025. Mexico's growth is moderated by lower demand. In the Middle East and Central Asia, Saudi Arabia's growth forecast has been revised down to 0.7% due to oil production cuts, and Sudan's outlook has been significantly downgraded due to ongoing conflict. Central Asia faces challenges with growth impacted by regional conflicts and fluctuated oil prices. While benefiting from higher commodity prices, the region grapples with the economic repercussions of geopolitical tensions. Overall, the growth dynamics in Central Asia remain uneven. Tajikistan is planning to establish a logistics zone on its border with Afghanistan to enhance trade and streamline transportation processes. Bakhreddin Sirojiddinzoda, head of the Tajikistan Export Agency, announced that this logistics center aims to boost trade turnover, modernize infrastructure, and regulate transportation costs. The proposed logistics zone will be located either in the neutral zone or near the Pian Sher Khan Bandar border crossing. This initiative addresses current challenges faced by drivers, such as the need for visas to pay road taxes and fees for a short 500-meter stretch when exporting goods to Afghanistan. Sirojiddinzoda emphasized that this initiative is independent of Tajikistan's diplomatic relations with the Taliban, which remains unrecognized by most countries. He noted that while the Taliban government is not officially recognized, trade continues, with some countries establishing trading houses and commercial offices in Kabul. Tajik goods are transported through Afghanistan to Pakistan, with Afghanistan ensuring the security of these routes. In the first half of 2024, Tajikistan's agricultural exports to Afghanistan surged to $82,700, marking an 85% increase from the same period in 2023. The trade between Afghanistan and Tajikistan has totaled $30 million in the past 7 months. During this period, Afghanistan exported goods worth $8 million to Tajikistan, while imports from Tajikistan amounted to $22 million. A textile factory in Kandahar, Afghanistan, has resumed operations after an 18-year hiatus. According to the Taliban's Department of Culture and Information, the factory is currently utilizing around 400 of its 3,000 machines to produce textiles for the Ministries of Health, Defense, and Internal Affairs. The remaining 2,600 machines intended for commercial use will require nearly 14,000 workers to operate at full capacity. The factory, originally opened in 1977 under Afghanistan's first president, Mohammad Daoud, was built by Soviet and German companies. It includes 2 workshops capable of processing 7,692 tons of cotton per year and producing 41 million meters of fabric annually. Production ceased in 2006 due to the conflict involving the United States. Dozens of other factories in Afghanistan faced similar disruptions during the war, but production has gradually resumed following the Taliban's return to power in 2021. Notably, the state bakery Silo-e-Markazi in Kabul resumed production 2 years ago after a 30-year break. The reopening of the Kandahar textile factory is expected to provide employment opportunities and contribute to the region's economic growth. The revival of the Kandahar textile factory is a part of a broader trend of industrial rejuvenation in Afghanistan. The Taliban government has focused on restoring the country's industrial sector, aiming to stabilize the economy and improve self-sufficiency. That's all for today's news. Stay tuned for more updates.